Look, crypto has changed in a huge way this year. The big game is here. The shifts occurring are being locked in for the long term. Plus, this process is only just getting started. That's the crazy part. We're just at the beginning, not the end. Before I go on, let me be clear. One of the signs of a cycle top, as you'll know if you've studied the anatomy of a bubble, is when people start announcing with extreme conviction that we are now entering a new paradigm of whatever, AI, money, bullshit, whatever. But don't worry. This isn't FOMO-fueled delusion I'm talking about today, just to be clear. There are actually significant structural shifts that are occurring within and around the cryptocurrency market that are changing the industry in ways that are very important for traders and for investors alike. So let's break some of this down. And by the way, there are historical parallels for this. This is the asset maturation phase, the big Wall Street phase, the golden bull run, so to speak. But I want to break down exactly where we are and why the big changes are occurring right now and how you can plan to profit from these developments. And the key factor driving the evolution is the fact that crypto buyers themselves are changing. A new crowd with much bigger wallets has showed up. As Wall Street legend Tom Lee put it recently, Bitcoin is gaining traction as a replacement for gold, and there is now institutional adoption of that exact thesis, which itself can then result in the end of the 4-year cycle. After all, gold doesn't move in 4-year cycles, does it? Nope. Doesn't have those sort of boom bust rebounds based on, I don't know, the gold supply getting cut in half or some BS like that. And I know Bitcoin's unique, but so if BTC is in some ways the new gold held in order to preserve wealth, then it doesn't make much sense for it to carry on acting like it did in the 2010s when it was a fringe internet asset. Also, by the way, when gold got its ETF, went on an 8-year bull run. Could crypto follow a similar path? Backing this up, Tom Lee also states that these SAT stacking institutions are basically permanent holders of Bitcoin. They're not trying to flip it for a few bucks like most traders have been and the whales have been over the last few years. By the way, in case you're wondering, Tom Lee sees $1 million price tag on BTC over the long term. And on the topic of institutions buying, if you weren't sure whether that's really happening, okay, one of the latest eye-catching buys from a major establishment name comes courtesy of Harvard University. Controversial institution. They bought $117 million of BlackRock's IBIT BTC ETF. An interesting point about that purchase is that it makes up roughly 0.2% of Harvard's $53 billion portfolio. And BTC currently makes up around 0.2% of global asset values. So then what happens when every other institution decides that they also need to have a similar allocation of 0.2% to Bitcoin? What will that do to both BTC's share of global asset values and also to its price? Spoiler alert, the price goes higher. What happens after that to the amount of BTC as considered a reasonable allocation? That's also an interesting question. My prediction is that all these things are going to shift, of course, to the upside, dramatically so. And you know what else is dramatic? BitUnix's current trading offer for you guys. Look, I know you're trading the cryptocurrency markets out here. You want a place that's going to respect your freedom with no KYC, no VPN, no BS. It's BitUnix, okay? Available to anyone, anywhere. That means you're anyone, anywhere. You can trade on BitUnix. Long the rips, short the dips, deep liquidity. They got all the big coins. They got your dog coins and stuff like that too. Here's the amazing deal they got right now. When you use my link exclusively right down here, you're going to go straight to VIP level 3 for a trial. It's a 30% fee discount. You're going to get up to $400 in deposit bonus. You deposit $1,000, get $200 back, and you deposit $2,000, get $400 back. Plus, you can get insane trading bonuses. Basically, the more you trade, the more bonuses you're going to get back into your account, up to $8,000 and 3 Ethereum as the top reward for active traders. Link down below, limited time offer. Go check it out. Thank you very much. Okay, so back to this. Look, you can see how a positive feedback loop starts to take effect here. We move away from pumps and crashes into a more orderly, gradual, constant bid and limited selling kind of process. Again, supply is getting locked up in these treasury companies. It's not going to just magically shake out soon. Again, there'll be fraud and rehypothecation, all that kind of bullshit, and it's toxic liquidity to some extent, but that's later us problems. In fact, a look at the chart right now shows this is starting to play out already, as the BTC price has moved differently post-ETF launch. It has. Okay, and as more money comes in, it continues to move differently. It's exactly this kind of steady upward movement that's created by a structured institutional bid into the asset class. Same as happening for ETH right now. And just go back to the gold comparison, take a look also at how the price of gold acted for the next 7 years after the launch of the first US traded gold ETF back in 2004. There are parallels for what's happening in crypto right now. Okay, this time is different, but it's not. Okay, it's a new phase of the market. It's not different. It's just new to crypto because it's new to this asset class. But this has happened before to other assets. It's not different this time. It's the same as has happened with other assets. Also, to get an idea of how much of an impact this kind of institutional buying can have, this chart here from Bitwise shows that so far this year, institutional demand for Bitcoin has vastly outstripped new issuance, with almost 550,000 Bitcoin bought, while fewer than 100,000 new coins were mined. That's insane. Now, for sure, old whale wallets do have the capacity to offload thousands of coins, and we've seen that happen. In fact, we had recently one big whale that had 80,000 BTC, sold it all onto the market, instantly absorbed. These old whale wallets, it's not going to happen forever. They're very rare at this point. The more coins that are churned over at current prices, the stronger support at these levels becomes. As mentioned, institutional buys are more sticky. This is precisely how BTC permanently reprices higher. Plus, let's not forget that Trump just signed an order allowing crypto to be included in 401k retirement plans. And that doesn't happen overnight. Again, everybody overestimates what's going to happen in the next week, but underestimates what's going to happen over the next 5 years. Again, this is a huge deal. We're talking about BTC taking a slice of a $12 trillion pie of money. And again, long-term structural buying. We're talking about here the asset class is maturing. Essentially, then the market is changing because institutional buying is so different from just the retail speculation hype buying. But if you're a long-term holder, this is very, very good for you. You're riding the wave of institutional and mainstream adoption into the entire asset class. The probability of extreme downside risk is reducing. ETH whales are also stacking away. It's not just Bitcoin, by the way. And people are saying, oh, it's Bitcoin only. It's not Bitcoin only. Look at the treasury company stuff. Look at the ETF inflows to Ethereum recently. Check this crypto quant chart to see how the trend is going when it comes to ETH accumulation, and it's a similar story. Large holders are increasing their stacks, while retail buying is on the opposite trajectory, with a crossover occurring in May of this year. Also, I mentioned at the start here how people will start talking about the top of a bubble forming, but if a bubble is currently blowing up around ETH and ETH treasury firms, then guess what? We're still in or around the early phase of it. We're in the media attention phase, maybe. Okay, you got Tom Lee and Joe Lubin out there going on CNBC and, shilling their bags and megaphoning ETH and their companies and stuff like that to the audience. But interestingly, Tom Lee has also made the point that just because asset prices are going up, that in of itself doesn't indicate a bubble, or at least not yet a bubble. The bubble will come, but I think we're still at very early phases here for it. It's not until asset prices are going up and everyone has flipped bullish that you have a full bubble situation. And guess what? Not everyone is bullish. Far from it, actually. There's a lot of very bearish people for a variety of reasons still. You also have even, Vitalik coming out and okaying ETH treasury firms. So look, Vitalik recently gave his thumbs up to ETH as a treasury asset, as treasury firms provide more investment options, although he also outlined the possibility that ETH treasury companies could actually at some point be at the root of a crash through over leveraging, which we talked about this before, of course, through forced liquidations. Again, we've talked about this stuff before. It's the toxic liquidity of the cycle. Some of these treasury companies will just fine. Others will have problems. I think Tom Lee's and Joe Lubin's companies will probably be fine. But again, this is a hazard to be aware of as the bubble expands and the mania increases rather than an immediate danger right now. Something for later you to think about. Overall, the key point here is that crypto has changed because the buyers have changed. And it's really just that simple. This time is not different. It's the same as has happened to other asset classes. It makes sense that the knock-on effect to all of this is that the 4-year cycle could change. So we have to be open to the possibility of an extended cycle. This pi cycle top prediction sees time added to the current run, and also President Trump himself is signaling that his plans for the economy and the markets are basically higher for longer. Okay, pump everything. It's all going to go to the moon. Hold on to your butts. The all-important macro might line up too, but as always, it's a question of weighing up the probabilities and remaining flexible to what is happening. Thanks for watching.